Welcome to the Hoke LLC webinar entitled Asbestos Insurance, Does My Company Have Coverage? My name is Jake Mim and I'm a partner at Hoke LLC. This webinar is really designed for new asbestos defendants or any asbestos defendant who does not have a complete grasp on all their historical insurance coverage. This webinar is going to be somewhere around 10 to 12 minutes long. It's relatively short, and hopefully it'll provide you with some background that will be useful to you and your company. The webinar is split into 5 sections. Section 1 is asbestos litigation, just giving you a sense of where we're at on the spectrum in terms of asbestos litigation. Second section is typical allegations in an underlying action. Third section is identifying relevant insurance policies. Fourth is locating relevant insurance policies. And then finally, fifth, what do you do once you locate insurance policies? Now, first of all, asbestos litigation. Anyone who's practiced for long enough is somewhat surprised at how long of a life cycle asbestos litigation has had and continues to have. There have been hundreds of thousands of claims filed over the years against companies relating to asbestos exposure. Currently, there's approximately 7,500 claims filed each year throughout the country. Around 4,500 of those claims, the plaintiffs allege exposure to asbestos caused them to contract lung cancer, while another 3,000 or so allege that their exposure to asbestos caused them mesothelioma. There's approximately 8,500 corporate defendants historically, and of course new companies are being sued every day. There is no indication when the litigation will end. The plaintiffs' firms year after year come up with a new list of asbestos defendants to target and new legal theories. So there is no end in sight at this point. Overall, there certainly are in the billions of dollars in corporate liability relating to the use of asbestos over the years, but much of that liability is covered by insurance. Now, the typical allegations in an underlying action, either one plaintiff, which is very typical, or a plaintiff and their spouse will sue multiple defendants alleging that they sold asbestos-containing products. Depending on the jurisdiction and the plaintiff's firm, it could be a handful of defendants that are being sued, or it could be literally dozens. In those underlying cases, the plaintiffs claim exposure to asbestos-containing products at this point in time, usually beginning in the 50s or the 60s. The latency period for a person to get an asbestos-related disease is anywhere from 20 to 40 years typically from their first exposure. So if people are filing suit now, typically they're going to allege exposure at least as early as the 60s, sometimes the 50s. And then of course the plaintiffs allege that their exposure to a company or company's product led to them much later on in life developing mesothelioma or lung cancer. The next section, section 3, is identifying relevant insurance policies. Typically speaking, we're looking for commercial general liability policies. And what does that mean? Well, it's easier to tell you what it doesn't mean. It does not mean workers' compensation policies unless it's your employee possibly former employee who's claiming exposure and injury. We're not talking about property policies. We're talking about your typical commercial general liability policy, which would cover product liability type claims. There's two types of CGL policies. The first is claims made. The second is occurrence based, and it's important to know the distinction between these two so that you can understand what type of policies you're looking for and for what period of time. Claims made policy, that covers a claim that's made during the policy period. That is, the most typical would be a car insurance policy or a health insurance policy. If you get into a car accident today, you're going to contact whoever your insurance provider is today. You're not going to contact your insurance provider from 5, 10, 20 years ago because they obviously wouldn't cover that claim. The other type of policy is occurrence based, and that covers any occurrence that takes place during the policy period, even if the claim arising from that occurrence is not made until long after the policy period has ended. So as compared to a claims-made policy with an occurrence-based policy, let's say someone's exposed to asbestos and is injured in 1970, and your company has an occurrence-based policy from that time period. Even if they don't, the exposure to asbestos does not manifest itself in a disease until decades later, it doesn't matter that that policy period in 1970 has ended. You can still, as a company, look back and try to get coverage under that old policy. Prior to about the mid-1980s, the insurance industry typically wrote occurrence-based policies that did not have an asbestos exclusion. There was a sea change in the mid-1980s, in large part because of the explosion of asbestos litigation. In response to that, the insurance industry typically started offering any company who might potentially face asbestos liabilities, they started offering claims-made policies and insisted on the inclusion of an asbestos exclusion. So what does this all mean? It means, with few exceptions, a company who is facing underlying asbestos lawsuits is looking for old occurrence-based general liability policies that were issued anywhere from the mid to late 80s and before that. The policies in place now almost certainly do not provide coverage for asbestos because they're claims made and because they contain an asbestos exclusion. The old policies probably do cover asbestos related cases because they're occurrence based and because they do not contain an asbestos exclusion. Alright, now that we know what type of policies we need, where do we find them? This is more of an art than a science. Your ability to locate old insurance will really depend and vary from company to company. Some companies will have done a diligent job of isolating and maintaining their insurance records since the inception of the company, in which case you might be able to just walk down the hall and all of your old insurance policies are there. More often, though, a company will not have diligently maintained its old insurance policies because for various reasons companies might not have thought that they would have needed these type of policies decades later. So if you're faced with that situation and you don't want to hire a law firm like ours that goes out and does this for clients, this slide provides kind of an outline of where you can look to try to find evidence of your old insurance policies. First of all, you should start talking to people both who are currently at the company and who used to work at the company, anyone associated with historical insurance buying, and that would be typically risk managers for larger companies, CFOs for smaller companies. You'd also want to talk to your historical in-house counsel, just to try to figure out where they think the insurance policies might be. In some instances, if you've had a long-term relationship with an outside firm, they may have files from prior engagements with your company that would contain insurance policies. And then, of course, you want to talk to your insurance brokers. Typically, would not be required to save old policies, but I've run into instances where a broker may have at least a schedule of insurance that goes back to the beginning of time or several decades past. The type of documents we're looking for is pretty broad. It's any evidence of coverage. Obviously, the best thing you can find is the policy itself, but if you cannot find the policy itself, that's not the end of your journey, because it is possible to piece together policies because the insurance industry generally uses standard forms. So if you can find parts of policies, insurance schedules with policy numbers, correspondence with your insurers or brokers of record over the year, they can be really useful, because it's possible that an insurance policy number will tell you what type of policy it is and what period of time it was issued. It'll tell you, give you an indication possibly of what insurance company issued the coverage. Any scraps of information you can get which inform you as to who issued coverage for a particular time period that you're looking into is very beneficial. Third point is where to look. Well, obviously old insurance files, and some of these are more obvious than others. Secondly, you can look at accounting records. Companies notoriously keep their accounting records for long periods of time. And again, it varies company to company, but it's very possible that your old accounting records will show payments to insurance-related payments to a broker, which will help you because then you'll have the broker name, or sometimes to a particular insurance company. Board of director meeting minutes from the 50s, 60s, 70s, 80s sometimes will discuss with whom the company is going to place its insurance next year. It also might discuss the amount of payments for premiums and whatnot in the broker of record. The broker's files can be helpful. Again, you may not find a stash of old policies in there, but you may find old correspondence and schedules of insurance. State workers' comp records can also be useful, especially when you hit a dead end and you cannot figure out what insurance companies issued coverage. State workers' comp records, they're typically kept for a much longer period of time, and companies typically would place their general liability insurance with the same carrier that handled their workers' comp. So if you can locate your company's old workers' comp records that indicate who they placed insurance with, there's a good chance you should be reaching out to that company to determine if they issued your general liability coverage as well. Old M&A files are also good because as part of a purchase or a sale of a company, many times there will be a schedule of insurance. And the insurance companies themselves, many times they will keep copies of the old policies. You don't need much to go on to reach out to an insurance company and ask them if they issued your company coverage. It's going to cost you a first-class stamp and whatever little time it takes to write a letter. There aren't that many insurance companies that issued coverage, general liability coverage, over the years, especially when you take into account the consolidation of the industry. So it's always a good idea, once you start piecing together which insurance companies were involved in your company's historical insurance profile, just start sending letters out asking them for any proof of coverage. You'd be amazed, sometimes you'll get a great response and they'll have a copy of policy or policies. All right, what do you do once you locate your insurance policies or secondary evidence of your insurance policies? Typically, the next thing you do would be to create a coverage chart. It's a graph that on the x-axis has the amount of limits, and on the y-axis has the passage of time. So it's typically organized by year, layers, and limits. They actually have specialized software for creating a coverage chart. If you get to that level of where you want that much detail, that's worthwhile. If not, you can use it in just put it in an Excel spreadsheet for starters. Once you've got your universe of insurers, the next thing to do is to determine which insurers to notify and tender. Notify and tender are not precisely the same thing. Notify would be to just notify the insurer that a claim's been filed. Tender typically means you're asking an insurance company to defend or indemnify you in a claim. And who to notify and tender depends on numerous factors. What are the allegations in the underlying complaint? If the person doesn't claim that they were exposed to asbestos until 1975, then typically you would not contact any insurer who issued coverage prior to that time. Another major factor, and this is by no means exhaustive in determining which insurers to notify, would be what your law's jurisdiction is. One of the big issues, and there are many, but this is one of the big issues, is are you in an all sums jurisdiction or a pro rata jurisdiction? In an all sums jurisdiction, the policyholder can usually choose which insurer is liable by layer, at least. While you're in the primary layer, for example, you may be able to pick which of numerous insurers' policies who are triggered who will respond to the claim. A pro rata jurisdiction, the cost of defense or indemnity is generally going to be split among whatever insurer's policies are triggered, and possibly with the policyholder as well. So you'll need to figure out what state's law applies and what state's law you want to apply, and go from there. So I know I've thrown a lot out in this short webinar. So if you have any follow-up questions, please don't hesitate to contact me. I have my contact information up there. My phone number is 312-575-8590, and my email is indicated on the last slide. Thank you.